Hello and welcome back to Moneycontrol's live stream. You're tuned in to Closing Bell with me, Lovisha, Darad, and with me joining my colleague Yatin, Mota. Well, Yatin, Nifty is down for the third straight day and is now down 1% for this week. And given the gap down open we got today, it doesn't come as a big surprise. The entire week has been quite choppy given that there was tariff letters which were sent to more than 20 countries. And then we had copper tariffs, threat on pharma pockets too. But yes, what separated the day from the rest of the week was the disappointment on TCS June quarter results, which drove brokerages taking a more conservative stance, cutting target prices, and Nifty IT index that emerged as the top sectoral laggard for the day too. On the levels front, Nifty broke below that 25,150 mark and Sensex bled nearly 700 points. And the two pockets that stood out today was the Nifty Pharma and the FMCG pack. Yatin, we were saying that the market has been in search for triggers, and the first bullet that the market has been shot with is TCS disappointment.
Clearly, and yesterday I met the TCS management, and still a lot of uncertainty when it comes to the growth. Still, there is a struggle. No clarity on hiring, no clarity on how really do increments go for employees, because of which, this quarter we saw record 2-year high attrition, nearly 13.5–14%, kind of a level there. And, if you look at the clients also, the decision making has been slightly weak because of, the kind of trade wars and the macro developments which are happening globally. More importantly, we have the European manufacturing base impacted. The auto industry is getting impacted, retail is getting impacted. So the sectors wherein IT companies have large clients have seen some issues because of the lack of decision making. So yes, TCS clearly quite weak in trade. But talking about the markets, the close was not that great. In fact, we were trying to defend the 25,500 mark since the start of the week. We were literally struggling, and we closed the week close to 25,150 on the Nifty. Mid and small cap indices also witnessing a percentage kind of a cut. And if you look at the advanced decline ratio, quite weak. In fact, it was almost 1:3. So a lot of pressure in the markets, especially on this Friday.
A lot of pressure, and let's take a look at some of the large cap gainers and movers at this point of time. The first is the gainers on the Nifty 50, that is your HUL dominating the list with about 4% gains. We did see a new management coming over. MD and CEO Priya Nair has been appointed as the MD and CEO, which is effective from August 1st onwards. So the street has been appreciating that, and that's why we can see a good uptick on the counter too. Other than that, SBI Life snapping its 2-day losing streak, gaining about 1.3%. Axis Bank, Kotak Mahindra Bank, IndusInd Bank, all of the private lenders seem to be doing well, and they were holding well in today's market. However, on the contrary, if we look at TCS, that was the top disappointment with about 3% cut coming in there. We did see that the brokerages have cut the target prices, and of course we'll talk about the stock in detail later in the segment too. But yes, the spell off was imminent in other IT stocks as well. We can see Wipro, Tech Mahindra, all of them actually lost in today's trading session. Other than that, auto stocks were also one of the top laggards. M&M, Bajaj Auto seeing some of the cuts with about 2% loss at this point of time. Hero MotoCorp also seeing a cut of about 2%. But yes, broader end of the markets, Midcaps once again down for the 6th straight day. Small caps once again extending the loss for the second consecutive session. Yatin, why don't you take us through what happened in the broader end of the markets?
So if you look at the broader than the market, as I said, the market breadth was weak. But if you look at the Nifty 50 and the Nifty 500 gainers, are not many. In fact, we had Piramal Enterprises, Asai India kind of stocks moving 4–5% in trade. And if you look at various stocks, a lot of reactions on the quarterly updates as well. Apart from that, in the new listings, we had NTPC Green doing well, 4% higher for that stock. In the pharma space, we had Wokhard, Newland Lab also moving by 3.5% or so. What was not doing well is Ireda. Very bad asset quality, especially with one of the accounts in South India, as well as Gensol Engineering, where we saw corporate fraud. So that impacted their asset quality, and the stock fell nearly 6%. Elecon Engineering, BSC Limited, Amber Enterprises, MCX, GRSC, the defense pack also witnessing massive profit taking. So yes, in general, a very weak sentiment when it comes to the mid-cap end of the market.
That's right. All right. Now let's quickly break down some of the stocks that did grab limelight today. That was your TCS, clearly the stock of the day, given the sentiment was subdued today, and we saw a 3% cut, one of the top Nifty laggards. TCS marks the kickoff of the first quarter earnings season. So the soft June quarter numbers, which saw a top line miss, 3.3% drop in revenue in constant currency terms against the street expectations of 1%. However, on the net profit numbers, that grew modestly by about 4% on a Q-on-Q basis, which was above expectations. Coming to the deal wins, they were within the company's guided range, but it dropped compared to March quarter. And a key highlight is that the company has not decided on the salary hikes for FY25 because they've been saying that there is a slowdown in deal closures and there are certain macro headwinds which continue to persist. That is why there's a little bit of a lag over there. Now, what the brokerages have done, they have turned quite cautious on the counter. They have cut the target price. For instance, if you look at Nomura, they've shared a neutral call on the counter and they've cut the target price. What they believe is that the growth visibility for FY26 remains quite hazy. They even trimmed the FY26 to 28 EPS estimates, digesting that there will be moderation in revenue and margins going forward. If you look at another brokerage firm, that is your UBS, even they reduced the price target on the counter despite retaining a buy call. Now, they said that TCS stock has underperformed their large Indian peers on a YTD, 1 year, 2 year, or even a 5 year basis. And this underperformance is largely due to derating because the revenue conversion has been quite slow despite a strong deal momentum. On the other hand, if you look at the other two brokerages, that is your HSBC and JP Morgan, they retained a neutral call on the counter. And JP Morgan expects FY26 revenue to decline and remain flat in the international markets on a CC constant currency terms. Yatin, even the management, they have said that the geopolitical uncertainties have caused demand contraction. Given that the tariff deals are still on the way, it would be a long journey to get anything back on the track.
Clearly, I think the near term is challenging. However, TCS said that versus FY26, versus FY25, beg your pardon, FY26 could be better for the international business, and they are expecting some order build up on the BSNL front also. Remember, for the quarter, the overall CC revenue decline was 3.3% QOQ, out of which minus 2.8% was contributed from the BSNL base, and the international business, was down only 0.5%. So yes, there are macro headwinds, especially for the next 1 quarter, and if Trump doesn't decide on the tariff solution, probably the uncertainty would continue, especially for the IT pack.
That's right. All right. This is one stock that we need to watch out for. But let's talk about another Tata Group company. That was your Tata Elxsi, because that shares hit a 9-week low in today's trading session, and the stock witnessed a cut of about 1.5%. Now, this came after the company posted a weak set of numbers for the June quarter. And this was the 4th straight quarter where the company has disappointed on both the revenue and margins front. If you look at the numbers, revenue falls about 4% on a Q-on-Q basis, margins contracted by a sharp 200 basis points, and which led to a 16% sequential drop in profit. Now, what the brokerages have been saying, Morgan Stanley has maintained an underweight rating on the counter, and they've cited another quarter of weak performance despite low expectations. JP Morgan, they have also shared an underweight rating with a price target of 3,800 rupees, seeing another 50% downside from today's cut. JP Morgan has even cut the earnings estimates by 3 to 5% for FY26 to FY28. So yes, the management has attributed the weakness to tariff-related uncertainties, which have delayed any project ramp-ups, and they have deferred some of the deal signings also. Yet, if you look at the stock, it's about like 6,000 right now, and from an all-time highs, it is down about, from 10,000 to about 6,000. That is where we are at. So analysts even believe that the price at this point, the stock is quite expensive compared to the negative growth it has been seeing in the past couple of quarters.
Yes, absolutely. And it's the same story for IT stocks, and especially when Tata Consultancy Services and Tata Elxsi have seen a weak quarter. But what was doing well in trade, let's discuss that. And Glenmark Pharma, that stock zoomed 15% in trade. In fact, intraday it went as high as 20% after signing an out-licensing deal for one of their cancer drugs with plasma, capabilities with AbbVie. Now, it's an entity of Abbott, and clearly Glenmark will get nearly $700 million as upfront payment. This is like almost more than 5,500 crores upfront payment, and also they'll get milestones to the tune of $1.2 billion, which is another 10,000 crores plus when it comes to the sales royalty, as well as achieving several milestones. So A big deal for Glenmark Pharma. The markets were expecting deal size could be, you know, close to $300 million, $500 million, but they were able to get $700 million upfront payment along with 1.2 billion, you know, kind of payments for the out licensing milestones. Not only that, what does this do is that it reduces, you know, the debt burden for Glenmark. It reduces the R&D burden for Glenmark, and clearly boosts the overall earnings. And because of this particular event, we saw the shares clearly zoom in trade, making it the stock of the day.
That's right, one of the top gainers for today as well. But yes, since we have been talking about the gainers and the optimistic stocks, HUL, that was also a big move coming in after we saw a new MD and CEO being appointed. Do note in the last 5 years, the stock has given about 8% returns, and today itself, the stock went as much as high as 5%. So this announcement came out as a big cheer for this FMCG giant. Now, what has happened is that Rohit Java has stepped down as the MD and CEO within just 2 years of the appointment. So that is the shortest stint of a leader in HUL that has seen. And this, he said, is due to this he plans to pursue a personal and professional chapter in his next journey. That's why he's been resigning from his position. Remember, from the last 2 years, macro headwinds continue to persist, and it has been reflected in the numbers that HUL has showcased. But importantly, now Priya Nair, she has been appointed as the MD and CEO to succeed Rohit Java, which is effective from August 1st onwards. She's currently the Executive Director of Beauty and Wellness at Unilever. And 1995 is when she joined HUL, known for driving digitization, premiumization and brand building for the home care business, which even saw a fair amount of growth. She's also the first woman CEO of HUL. So Yatin, you know, new management, and now the question is where the focus would be, given that volume growth has been a challenge, and how the food portfolio would also perform after their ice cream demerger.
Yes, and I think HUL doesn't have any management talent shortage. You know, Rohit Java was a big, tall name. Replacing him, you know, probably was something that the market had been nervous. But now, with Ms. Nair's appointment, who has been at HUL for the last 3 decades, you know, she joined in 1995, and clearly now, you know, heading the entire personal care, beauty segment or the cosmetic segment globally. So she has, you know, a balance of domestic experience, international exposure, and given the fact that now the you know, FMCG pack is witnessing some bit of tailwinds, better monsoon, recovery in the rural consumption. We saw the monthly, quarterly updates also, wherein we saw pickup clearly in the internals of India, especially the tier 1 to 3 cities, and also the rural markets. So yes, for FMCG players, the management transition as well as the kind of tailwinds right now one has seen a significant amount of contribution in the rally of HUL shares right now, closing at nearly 5% higher.
That's right. All right. All right, that's all the stocks we have for today. But yes, Nifty below that 25,150 mark, given the disappointment we had on TCS. Now, whether or not it spreads out to other IT players, we need to watch out for. Next week, we have more large cap players which will be reporting the numbers. Wipro, Tech Mahindra, HCL Tech, all of them will be reporting the results. So, all eyes on that. But for now, it's a wrap from Yatin and me. We'll be back with markets next week. Thank you for watching.